Hello and welcome to today's The Last Trade Week Ahead video. Now in today's The Last Trade Week Ahead video, we'll be looking at a couple of things. Firstly, we'll take a look at the news which will specifically affect our markets. There's a lot of news in the world right now. The specific ones will affect our markets. And then we'll be taking a look at Sensex. And with the Sensex, I'll explain what my logic is, why our markets have reacted so badly in the past one and a half weeks. After which we'll take a look at Indigo. Indigo, whether you're a futures trader, equity investor or options trader, the insights will be very key. So do stick until the end and watch it. Now, coming to the news front, I believe the main news will be affecting our markets this week, especially on Monday's open, is the Iran-Israel issue is obviously there, but the Crude island issue, this is the Crude islands, an island of Iran, which produces a lot of Iranian oil, and so Donald Trump waited for all the markets, commodity and all, to close on Friday, and then went and bombed it. He didn't bomb the oil infrastructure, but bombed the runways and all. So that has sort of crossed a red line in the sand, and due to that, Iran has started even hitting the Saudi some oil infrastructure, as they were using one of their pipelines to try to bypass, and that is getting hit now. So that is one which will be affecting all the markets, and in fact I'm very interested to see how the forex and commodity markets open in the coming hours in the western side, and that will really set the tone for the Nifty, Bank Nifty, Sensex, as I believe commodity markets are not really going to like what Donald Trump did. So that's it on the news front. And now let's take a look at Sensex, at what my trading plan is, and why I believe we have fallen so badly. Now, coming to the Sensex, I believe our market has fallen this badly due to one factor which most are forgetting about. This is as at the beginning of February we had a budget that was read, and everybody who traded a budget day knows how badly our markets fell within a day. They had a momentous fall. And that was due to higher taxes being placed on the market and a lot of other silly restrictions. After which, the next day, due to sudden news, the markets were pushed up, and that resulted in a lot of people forgetting that there is trouble in the horizon and just sort of brushing it aside. So now with the Iran-US conflict starting, foreign investors are already selling due to higher taxes. That has now become worse because of the conflict, because we are getting hit by the fact that we have a highly taxed market, very highly taxed market, and also another fact, the issues in the commodities in Iran, Israel. So that's why I believe our markets have fallen much more than the Western markets have fallen, because I see a lot on social media that the US market has fallen by this much only. Why is our market falling by 12-14% in a straight line, the indexes? It's because of tax plus Iran, Israel. And I believe we have not heard anything from the finance ministry, for example. There seems to be no relief, and it's a funny scenario because financial markets are very important for the functioning of any country, but they seem to be not important in this scenario. Now, coming to the trading plan for Sensex. Now, the trading plan for Sensex is going to be heavily dependent on the open. This is, I believe, the first 15 minutes of trading on Monday is going to be very key, and anyone trying to do especially options trading the first 15 minutes has a high likelihood of losing. Futures trading does not have a high likelihood of losing. Why I say that is on Monday, usually the first 15 minutes generally option prices take to settle. But due to the volatile opens we are facing these days, so that settling period will be very key. So if you're an option trader, I would suggest, if you want to trade from 9:16 immediately, switch to futures for the first 15 minutes at least, and it's not going to make that much sense to directly hit into options, or wait till 9:20 for example, then look at options. Now, coming to the open, as long as the Sensex is between Friday's low and 75,850, this zone is going to be a two-way zone where we're going to get up and down moves. If it breaks 75,850 by some stroke, then it goes to 76,700 and 77,050. On the other hand, if we gap down due to the Crude island issue, and we break below or gap down below Friday's low, and the first 15 minutes we sustain below that low, there is a high likelihood we are going for 73,830, And if we break that, then we go to 73,150 and 72,800 in the coming sessions. So my point of view is, as long as we are below this, we are going to remain technically very bearish. If we break above this, then there will be short covering with these targets in mind. But below this is most likely going to be going down. Now, how do you play it if you're on positional front? Now, the positional front, how me and clients have played it, we started selling calls at the top in monthly, and we ironically still hold those calls. We sold some for like 1,200, 300, and we collected all that premium because it's did 99% decay, so many of them. So I believe the same scenario is going to continue. Even last week we sold more calls. We had sold puts in between, then we booked the profits the next day. Now I believe the same is going to continue. There are going to be small intermittent bounces where you can sell some puts and also earn premium there. But the call sales are going to be the more better approach to continue. And that is why last week for the indexes we sold more calls on different levels. Whether it's the Nifty or the Bank Nifty, we are focused primarily on these two indexes rather than the Sensex and all for positional trading. Stock futures, I believe, will continue most likely. For example, we shorted via stock futures at the top for a lot of names, and we booked half profits last week, and the other half are continuing with a profit stop. So I expect that trajectory. Yes, there will be intermittent bounces. I believe this week we will see a bit of bouncing coming around. It won't be like last week where there will be drops with a sharper than last week, but there will also be a bit of intermittent bounces this week on the Sensex, Nifty and Bank Nifty. So that's it for Sensex, Nifty and Bank Nifty. Now we move on to Indigo. Now coming to Indigo is, I've chosen to cover this stock. This is a stock that's going to be really hit, I believe, in the coming weeks. And I think everyone who is an investor should avoid Indigo at all costs. Why I say that is, number one, the problem started when they had the flight disruption, and then they were not sort of bowing down, and then Indigo's, I've seen a lot of the refunds they gave via coupons and all, most are not working on many people. So that's also another problem. And then the CEO quit, which was a welcome sign, and I believe that's what caused the small bounce you see at around these points. But the main factor which will affect Indigo is the rising crude prices and also the looming shortage which can be seen of basically aviation fuel. So the rising crude prices are going to basically really push margins of Indigo, as they will push a lot of the costs to the consumer. So that's when consumer will fly less, but they will have to absorb some of the margin hits. So that even means less passengers and less profit margin. So that makes it a very dicey situation for the airline. And I don't believe there will be any support coming from the government side. So my trading plan for Indigo is going to be that if you look weeks ahead, expect, yes, there will be bounces across the way, but the trend is going to continue going downwards for the stock. And I believe between 4,280 and 4,000, Indigo is now here going to give small two-way moves. If it breaks 4,000, it's going to 3,860 and 3,700. That's my targets on downside. Max upside I see right now is 4,420 on the stock. As I said, there can be bounces, but I believe mostly they're going to be going down. So if you're holding Indigo stock and you're holding it from up here, then your portfolio must be in obviously very bad red, but I think things are going to get worse before they get better anytime soon. So my point of view on Indigo is, if it breaks 4,000, it's a short to 3,860 and 3,700. Between 4,000 and 4,280, it's a no man's land. You're going to get there. Two-way moves. You break 4,280, a small bounce will come to 4,420. So that's it for my today's video on Indigo, Sensex and all. If you liked the video, then hit that like button and subscribe to the channel and click the notification bell. Thank you.